Mister, can you please explain again the previous slide?
Is it clear about this?
Yes.
Okay. Now it says that chronology. Okay. Now we have started with this. Is that in the while doing the revision every lecture you should be very clear where we are. Is that where we are now? We are talking in terms of what? We are talking in terms of the reports, and we are talking about report to the management and report to the members. Okay, this is the point where we are reaching. We started at this place. We focusing slowly and steadily, and we are reaching the last phase of the thing. At the end of the external audit, the audit produce a report which talks about what? Only opinion, whether it is true and fair of financial statements. Is it a true and fair of the financial statement? Make it sure which standard we are going to use. ISA 1700. Now I will be very active on the WhatsApp group, and please you have to respond. Is it right? I will start. If I am posting the questions, I will post the questions from 7 o'clock in the morning till 8 o'clock or 9 o'clock in the evening. That's all. Is it right? Beyond that, I will not post anything. Whenever you have, just refer the book, reply it. Very simple. Refer the book. I'm not holding you that you should not refer. You have to refer the book, and you have to respond. As are the financial statements prepared in all material aspects. Is that material is important? As simple as that. The purpose of audit is only material. Is that in accordance with the applicable financial report framework? This is what is there. Now I will go with all the revision wherever it is happening. It is there in the engagement letter that the financial reports we have to agree that the client is preparing financial reports, financial statement as per the financial reporting framework. Okay, this will happen with respect to IAS 700. Fine. Now, what is the unmodified opinion? Is expressed when the auditor concludes that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Fine, unmodified, that this is good, as simple as that. Is it an unmodified opinion? Is real, there is nothing wrong in that. Is it right? Means totally agreed. I can put like this. We will not say 100%, is it? It is totally agreed. Now, what is the unmodified in our opinion? Whenever we write in the end, a report is asked. They will ask specifically. You should write in a report format. If you are writing the report in the end, it is very much mandatory. In our opinion, the financial statements are presented fairly. It gives you give a true and fair view of the financial position, of financial performance for the year ended in accordance with the international IFRS. IFRS, is it right? We should not use IAS. We are reporting this. Is that we are reporting? They will prepare when they say it is as per the financial framework. It includes what? It includes the national legislations, it includes the accounting standards, it includes the reporting standards, as well as it includes the international standards of auditing. Sorry. Okay, we are preparing. It is an unmodified report. Unmodified report is cleared report. What are the things? We should be very clear. The report should be like this. It's like a letter, okay? Title, address, you have to be introductory paragraph, what we are doing and how it is going to be presented. What is the management responsibilities? What is the auditor's responsibilities? Is it right? If there is any opinion is there, modified opinion, unmodified opinion, adverse opinion, you have to mention that opinion after responsibility. If there is any other responsibilities in terms of experts, in terms of any other matters, we have to move. You have auditor signature, date and address. This is very, very, very important. I am talking in terms of the structure. Is it? People will people see, it's a 2 marks. It's a 2 marks. Students, what they will do, they will take it very lightly. Oh, we can write the letter in the own way. No, title has to be there for what we are doing. Is it? Then we have to whom we are addressing. Sometimes what they will ask you, they ask you some expert opinion. They ask you about the inventory. Is that for inventory you are doing? They are asking you the deficiencies in the inventory, recommendations in the inventory. What they will ask, identify and explain the deficiencies and recommendations. Write a report to the management. Is that? Write a report to the management about this. It means definitely you have to mention these things. Is that? By that time we will come back, we will revise it, we will have more specific thing. The second one, what happens if the auditor cannot issue an unmodified opinion on the financial? That is, the auditor cannot say that financial statements present are fairly. Is it right? In this case, the auditor will issue what? The auditor will issue a modified opinion. When auditors are not satisfied, is it right? When the auditors are not satisfied, they issue a modified opinion. Fine? Types of modified opinion. Now, is it right? Now, when you say types of modified opinion, 3 possibilities are there. What is the first one is what? The first one is the qualified opinion. The second one is the adverse opinion, and the third one is the disclaimer. Is it? No. What they are saying? How? As a student, don't say how does the auditor. How you know which type of modified opinion to use? Is it right? How we are going to use which type of opinion? The type of modified depends on the nature and the matter giving rise to modify. If the material misstatement or lack of sufficient appropriate audit evidence. If there is a material misstatement or there is a lack of audit, that's what we have covered. Is it? 2 things will be there. Is it? 2 things. Either it is insufficient evidence or it is a material misstatements. The auditor judgment about the pervasiveness, how it will affect. Is it affecting in single item? See, what we have done, it affects individually or it affects aggregate. Is it? It affects individually. Now you will, the moment I will do revision on Saturday, Monday, Tuesday, Wednesday, you will understand really. I will use all the, somewhere we have used in lecture 7, we will use here. Is it? It's a combination of the concepts which are going to use. All the time what we will use, if it is in, first we do individually and we will do aggregately. If in the auditor judgment about the pervasiveness, it impacts the complete financial statements, possible effects on the matter of financial statements as such. Is it? If that is the case, what we'll do? We will think over it. How best we are going to reflect this in the modified opinion as such. Okay? Now, next one. See the things. I have given in the morning, okay? Pervasiveness, describe the effects possible effects on the financial statements or misstatements or undetected misstatements due to the inability to obtain sufficient appropriate audit evidence. Is it right? This much. If it is a knowledge based question, is it right? It is a knowledge based question. Is it right? We have to write with minimum changes. Okay? If it is a knowledge based question. Effects, possible effects on the financial statements of misstatements and undetected misstatements. Is it? We are not detecting and it's not going to happen. It is like that is what we are very much concerned due to inability. Sometimes what will have inherent risk. Is it right? Inherent risk. We have talking in terms of what? We are talking in terms of audit risk. Audit risk, we are saying that it is an inherent risk. The risk is there, inbuilt. Okay, the risk is inbuilt. We cannot remove that risk. Is it right? Inbuilt. Fraud. If you take into fraud, what happens? If it is collaborated, we cannot. It is very difficult to identify fraud as such. Is it right? It is very difficult. We cannot track the fraud as such. Is it? Whereas in the audit risk, you are talking about the control risk. Control risk is entirely different. Is it? Insufficient controls, weak controls are there. Then we can improve the controls and we can minimize the risk. Is it right? That is what pervasiveness says. Effects or possible effects on the financial statements, either it will be a misstatements or undetected misstatements. Fine. Those that are not confined to specific elements. Is it? Those that are not confined to specific means it will have impact on overall financial statements. Overall impact, we are not going to say that was for one specific statement. Is it? For one space, you are not getting loan. It will have impact on every part. You have a legal claim. Is that legal case is there against the company? Definitely it will have impact totally. Is it right? It will have impact totally. You will not have a sufficient cash flows. You are losing the market. You are losing the market and you are losing the sales. Client is losing the sales. What will happen? It will have impact on the overall on the performance of the company as such. Those that are confined to specific elements, accounts or items and financial statements and represents or could represent substantial portion. If they are talking about the specific elements, is right? Specific elements, you take specific elements of what? Specific elements of you take specific non-current goodwill. Okay, you take specific kinds of goodwill, or you take specific of plant and machinery. Is it? Anything you can take. Is that you take assets, you take liabilities. But what happens if you are talking about any specific accounts or items? Okay, it could represent a substantial portion, means substantial portion in terms of what? In terms of amount. Percentage, is it right? Percentage to, we are not writing this. It is only to make you understanding. Percentage to assets, a percentage to liability. Now what will happen? What we have done, we have said profit before tax. We say it is a 5%. Is it? It's a 5%. That is the basis on which we are going to determine whether it is a material misstatement or it is not. Is it right? It will happen on repeatedly. It will have impact on the other in general financial statement. They'll say 1% of sales. Restrict only to this. I am taking the risk, I am telling you. Okay? Restrict only to this. Profit before tax 5%, 1% sales is 1%. only on losses. Is it right? Specifically only on losses. They will assess us. Is it right? If that is the means, when you are talking two things. One, we are not confined to those that are not confined to specifically in general. Is it right? With respect to finance. If it is specific items, then the amount will be have a substantial portion of the financial statements. Those that relate to disclosures which are fundamental to users' understanding. Is it fundamentals to users? When we say fundamentals to user understanding, we are talking in terms of what? Accounting policies. Is it? We are talking in terms of what? Accounting policy. Fundamental, going concern. Fundamental to users, what? We'll say that yes. What is the fundamental to users? What people will understand? Most of the, in general, people will understand that is a going concern or not. Company is going to survive next year or not. Is it right? This is a basic fundamental. Is it right? We are talking in terms of matching concept. It's a fundamental. Concepts as simple as that. Is it right? Going concern, business entity concept. Well, these are the basic fundamentals. Is it right? Whether the firm client is preparing the financial statements based on fundamentals. Is it? Fundamentals is very simple. You can put it as the conceptual framework also. Is that how we are preparing the financial statements, how you are understanding the national regulations, how you are talking in terms of reporting standards, and how it is going to be present. If these are clear, the users will not go in detail. Users will see the broader framework. Is it right? That if you take into consideration, this is the concept of pervasiveness. Okay. Next, what is the modified opinion? The auditor concludes that the financial statements are as a whole not free from material misstatements. Is it right? Means that is the modifier. You are modifying. They say cannot obtain sufficient appropriate audit evidence. You are asking the management. Is that you are asking? See, assume there is some issue related to inventory. You are asking first what you will do. We will identify what is the risk. Then we will see what is the evidence. Is it right? Then we will discuss with the management. Then we will say that we will discuss the minutes of the meeting. Is it? Then we will ask what? Written representation. Minimum 5. You put on these lines. Is it right? This is a very short way of having substantive procedures. Okay. Now you are discussing in the management. You are not getting response. Is it right? You are not getting any response from the management. If that is the case, means you are not getting sufficient appropriate audit evidence. If you are not getting a sufficient appropriate audit evidence, in that case, you are going to make sure that it is a modified opinion. It is very important to understand this. What is the modified opinion? Is that now? What is the qualified opinion? Is that what is the qualified opinion? See, qualified opinion means it's really. It gives shivers to the shareholders. Understand what? It gives shivers to the shareholder. The company inventories are carried in the financial statement position. Management has not stated inventories at the lower cost and net realizable value. We have to follow this. Is it right? As per International Accounting Standard 2. Is it right? But stated them solely at cost, which constitutes a departure from RES. Means they have not followed the rules, but they have simply stated at the value of the cost of the material. The company records indicate that the management stated inventory at the lower cost. Records are showing differently, is that what the company say? They are showing at the lower cost and then reserve. An amount would have been required to write the inventories down to the NRV. See what happens? Put the numbers, is it right? You are talking in terms of cost and you are talking in terms of NRV, is that? Either you have to follow this. Now what happens? They are simply following the cost. Is it right? Now the company records indicate that the inventory is at the lower cost. What company says? Company says that it is 4,000. Is it right? And net realizable value. An amount has been required to write inventories down to the net realizable value. They are saying that yes, net realizable value is assumed, net realizable value is 3,600. In the examination they will not ask, I am just giving you explanation. According that, what will happen? Sales would increase and income tax, net income tax, equity would have been reduced. Just imagine, is it? Just imagine. I will put an example. Sales is how much? Sales is 15,000. Fine. Sales is 15,000. You have only these expenses. Okay. Sales is. This is the cost. This is the NRV. We are comparing. Okay. Now, in one case, what happening? You are showing a cost of how much? 4,000. In the another case, you are showing a cost of how much? 3,600. What happens? Assume this is only the profit. Okay. In one case, the profit is how much? 11,000. In the other case, the profit is how much? 11,400. Okay. 11,400. Now, you take the things, what they are saying, tax. You take tax at the rate of 10%. Okay. Simply for our understanding. Here the tax is how much? Less. Here the tax is how much? More. Is it? Here the tax is how much? Less. Here the tax is how much? More. Automatically what will happen? See, one small mistake, it will have repercussions, implications at the later stages. Is it right? Now how much is there? Go in detail. You are getting how much? You are getting 9,900. Is it? You are getting 9,860. Is it? If check whether my calculations are right or wrong. 11,400 minus 1,140. 1,0260. Is it right? See the thing. How it will have impact. Is it right? 11,000 minus 1,100. 9,009. Is it right? Now, what happens? Your gross, see, you are showing lesser value. Is it? You are showing net realizable value is less. Automatically, what will happen? The profit is increasing. The retained earnings will also increase. Now, it will have impact on what? It will have impact on equity. Equity will increase by how much? 9,900. Whereas here the equity will increase how much? 1,000, 10,260. If you take the difference also 100, the difference is how much? The difference is 360. This is the basis of qualified opinion. We will not do numbers, but without numbers we cannot understand. You should visualize, yes, how it is going to have impact. The company inventories are carried in the one side. We have showing it a one thing in the records, and in reality there is another thing. Definitely there is a mismatch, and it will have impact on not only on the profits, but it will have impact on the tax. It will have impact on the net income. Is that it? You put it, this will have impact on the net income. This will have impact on the shareholders' equity. That is the reason why there is, in this case, if there is a difference amount in the financial records and it is not going to be matched with the real values, then there is you have to discuss with the management, get the reasons, get the return representation. If we are not giving, then you have to give a qualified opinion. Except for, is it right? Except for, in our opinion, except, you have to use this, in our opinion, except for the effects of matter described in the basis. Is that you have to mention except in the matter qualified, means we are talking only about the specific matter. Is that the financial statements are presented fairly? Is it? And that's all. In preparation with the financial reporting, international financial reporting standard. What you have to write? In our opinion, except for the effects of the matter described in the basis, is it? For the opinion, for qualified opinion paragraph, the financial statements are presented fairly in all material aspects. Okay? Only that one is having a doubt. In the examination, you make it sure. Whatever it is mentioned, you have to say that except for the scenario, and it has been the financial performance and the cash flow for the year has been ended in accordance with IFRS. Is that first we have done with respect to what? First we have done with respect to unmodified opinion. Is it right? First we have done with respect to unmodified opinion. Then we have done with respect to modified opinion. Adverse opinion, keep it in mind, it is material and it is pervasive. Only for this it is applicable. And only for this it is a material misstatement and it is pervasive. If that is the case, if both will go side by side, then in that case you have to mention it is an adverse opinion. 99 cases we have done, maybe in 1 or 2 instances we have got this type of question. Is it? See, that is a fundamental. This is the fundamental stage of auditing paper concepts. They will not go to that. That is the policy of them. The company has included house built in for resale, including land at a cost of X as non-current assets and depreciated them at the rate of this percent. Is it? This much depreciation has been done. Under IFRS, this should been included. This should have been included in inventory in the financial statements, and no depreciation should be provided. The carrying value of the house is 90%. This is material. Of the company's total assets, is it right? And the company records indicate that that's all. They have put here dots, okay? They have put here some dots, as simple as that. Means they have restricted here, they have put some dots, okay? Now, what happens? It is, actually it has to be shown as a current assets, but they have shown it as a non-current. Why it is a current asset? Understand the thing. It is for resale. Is it right? It is for resale. What if it is resale? It means it is nothing but it is an inventory for them. One side they will purchase and one side they will sell. Got my point? Understand this. Is that this is one word that will determine the entire answer for that. Okay? They have it for resale. Resale is not a fixed asset. Resale is a floating asset. Floating asset is going to be what? Floating asset will be treated as a current asset. But what the company had did, Company has calculated, identified as a non-current asset. They have the depreciation amount. They have calculated depreciation also, and subsequently they have shown it on the IFRS. And just imagine 90%. Your what happens? Your non-current assets will shoot up by how much? 90%. And your current assets will be how much? Down by how much? 90%. In this, what happens? Definitely, imagine they have done depreciation. The moment they are doing depreciation, what will happen? The profits will decrease. Is that the profits will decrease? Automatically, what will happen? The shareholders' funds will also decreases. Just a technical mistake that instead of inventory, you have added as a non-current asset. In our opinion, because of the significance of the matter discussed, based on the adverse opinion paragraph. Which opinion paragraph? Adverse. You have to mention except for. Is it right? Except for modified opinion paragraph. You have to mention very clearly which paragraph it is. Is it? It is adverse opinion paragraph as such. The financial statements do not present fairly and do not give a true and fair view of the financial position and the financial performance as per the IFRS. Is it right? Now you understand what if it is a technical basic mistake, misclassification is a error where error is with respect to what? Error is with respect to classification. If the classification is wrong, definitely it is having a material impact, 90% of the assets. Definitely it is a material and the opinion is going to be adverse. Qualified opinion due to obtain is inappropriate sufficient appropriate evidence. Is that with respect to the inventory of a carrying amount, they are giving a scenario. Is it right? They are giving a scenario with respect to the inventory having carrying amount of sum. The audit evidence available was limited because we did not observe physical inventory. What is the conditions of the inventory? Whenever there is a inventory count, is it right? Whenever there is a inventory count, the auditor has to physically present. Is it right? Physically present, and they have to observe and they have to inspect. Yeah, we didn't observe inventory count since the date was prior to our appointment as an auditor. Owing to the nature of records, we are unable to obtain sufficient appropriate evidence. Is that they have not? Owing to the nature of record, why they have not, since the date was prior to our appointment. Is it right? It is not that they have to inform the auditors that when the inventory count is there. They have done it before the auditor came. Is it right? If that is the case, they didn't obtain sufficient appropriate evidence. Now, how they are presenting this? In our opinion, except for the possible effects of the matter, except we are only talking in terms of what? We are talking in terms of inventory. We are not mentioning anything. See the thing in general. In our opinion, you have to write with this. A report should be reflected in our opinion. Except for the possible effects of the matter, based on the qualified opinion, the financial statements are presented fairly. Means for that matter we didn't get any evidence. But for other things, everything is fine. They are the same thing which is repeated, is it right? They have prepared as per the financial performance and in accordance with the financial report. Now what we have learned this, what we have learned, if we are not getting evidence for a particular item, we have to, and it is material, we have to mention that it is a qualified opinion. Is it right? It is a qualified opinion. Emphasis on paragraph, true and fair. Is it right? We got it, everything as per the requirements and subject to the matter. Other things are true and fair. Disclaimer means, first understand why we are talking about. Disclaimer means we are not having any information about it. Without information, the auditor cannot give an opinion. Without evidence, the auditor cannot give an opinion. Is that here the evidence is lacking? Is that here what's happening? The moment you are saying disclaimer means you are not taking any responsibility. Here what happening? The evidence is lacking. Okay, the evidence. We are not appointed. We are not appointed of the auditors until December 31st, 2001, and thus did not observe the counting of physical inventory in the beginning and end of the year. We are unable to satisfy ourselves by alternative means in terms of inventory. Is that held on 31st March, which are stated in the financial statement. Definitely, you are not part of the audit. You are not observed the physical inventory count. Is it right? In that case, we are not supposed to give any opinion. We will say very clearly, this is the disclaimer because we are not part of this activity. Is it? We are not part of that. Now you can understand. Auditors will be very specific what they are doing and what they are not doing. Disclaimer means if the evidence is not done and you are not associated with that activity, definitely you keep distance. As of the date, continuation of that, as on the date of our audit report, management was still in process of still in the process of rectifying the deficiencies. We are unable to confirm. We are not getting any confirmation. We are not verifying by any alternative means with respect to receivables. Is it right? And the financial position. As a result, what happened? We are unable to determine any adjustments which has been found necessary. Means that's the basic thing. Here they are mentioning what? They are mentioning related to what? They are mentioning related to receivables. Is that they are mentioning related to what? They are mentioning related to receivables. Means what is the inventory? See the thing. Inventory is there. Inventory is going to be sold. Is it right? Inventory is this is the chain way how it will work. You will have inventory. Is it right? Inventory will be dispatched. Is it right? Inventory will be dispatched. Inventory will be dispatched. It to the home it will be converted into sales. Sales will be converted into receivables. Now we don't have any alternative methods also. Is that what we have done? You have a goods delivery note and here you have the goods received note. Now you understanding where we have used this? We have used somewhere in lecture 7. Goods delivery note will be what? With respect to the sales which we are delivering. Is it right? The client will have a goods received note, or in other words, you are purchasing. Is it right? You are purchasing. If that is the case, it is a goods received note The person who is selling, for them it is a goods delivery note. Based on the goods received note or goods delivery note, what will happen? They will be either you are receiving payments or you are going to pay for that. Either it will be payables or it will be receivables. Is it? Any other option is not there. You are exploring, no other option is there. Then in that case, what you have to mention? We have to mention it is a disclaimer of opinion. As a matter of this matters, we were unable to determine any adjustments. Is it found necessary in respect of recorded or unrecorded inventories and receivables? If that is the case, disclaimer. They will not ask this much, but just focus on that. Okay? Because of the significance of matter, describe the basis of disclaimer of opinion paragraph. We are not able to obtain evidence to provide basis for the audit opinion. Okay? We have to mention what? The disclaimer of the opinion. These are the things you understand. It is more in a summarized manner. Okay? Very summarized manner. Financial statements are materially misstated. What is the situation? Is it right? If material but not pervasive, qualified. Is it? Qualified means what? You have to make it except for. Qualified means except for. Financial statements are materially misstated. Is it right? Auditors unable to obtain sufficient audit evidence, again we have to say it is except for. If it is material and pervasive, financial statements are misstated, it is very, very grave mistake. If it is material and pervasive, and regarding the financial statements, it is pervasive. If you are not getting any evidence, and it is material, you are not getting any evidence and it is material and pervasive, only in terms of evidence, okay, what will happen? It is going to be a disclaimer. Because you will very simply say, we don't have that information as on that date. If there is no evidence is there, definitely we cannot give an opinion. Consider the following three situations, is it right? And decide whether modified opinion is required, or if you decide a modified opinion is necessary, what side of modified opinion is appropriate. Net assets and revenue. Is it right? Net assets and revenue. A customer has gone bankrupt shortly after the year end. At the year end, 25,000 was owing from this customer, but the directors will not amend the financial statements as a result of customer becoming a bankrupt. How much is there? How much they have given revenue? Is it right? Net assets are how much? See, how much they are talking in terms of a customer has become a bankrupt. Is it right? What is the amount of 25,000? Is it right? Put 25,000 based on assets. Assets are how much? 250,000. It comes to how much? It comes to 10%. 25,000. Is it right? 25,500. Is it 25,500? Is it right? Divided by 455. Is it 25,500 divided by 455? It comes to how much? It comes to 0.05 or 5%. Here they are talking about a amount of 1,560 representing due to from a new supplier which has been omitted from the year end financial statements. No other errors or accruals or trade payables have been found. Is right? There is no other error. Only means what we have to do? We have to say except for. If small fire at head office has resulted in the loss of some records, most of which related to inventory. Inventory is one of the biggest figures in the financial statements. Which opinion you are going to make it here? Just guess. In situation 3. In situation 3, which one you are going to have? I think it is disclaimer, except for. Disclaimer. Is it? It is a disclaimer. A fire has destroyed inventory records and inventory is material. Okay, inventory is material. Balance. Unless the auditors can obtain the evidence related to the destroyed records from elsewhere, it is likely that this will have an impact on auditor's opinion. The auditor's opinion will probably be modified due to inability to obtain sufficient appropriate audit evidence. Without further information, we cannot say whether the opinion will be qualified except for or a disclaimer of the opinion. Is it? Means we don't have the evidence. Is it right? We don't have the evidence. Is it? Where is the table? See the table. Where is that table? Is it? See the thing. Auditors unable to obtain sufficient appropriate evidence. Is that right? If it is material and pervasive, it is disclaimer. If it is material but not repeatedly happening, it is going to be except for. Is it right? It means it is except for. Means they have mentioned both the things. Is that? See the thing. They have mentioned both the things. They say that we cannot say whether the opinion will be qualified, that is except for or a disclaimer. Is it right? If it is not pervasive, is it right? It is not pervasive, it is a except for. It is if it is a pervasive, it is a disclaimer. Okay? Fine, no problem. What they have mentioned, what is the first situation, is right? And major customer has gone bankrupt shortly after the year end. At the year end, 25,000 was owing from this customer, but the directors will not amend the financial statement as it is material. It is right? It is material but not pervasive. Is it right? It is material but not pervasive. What they have mentioned, see the thing. A customer going in the year end and adjusting. In this case, it is seem unlikely that the balance will be recovered. Is that 25,500 represents how much? 10.2% of the assets, 5.6% of the revenue. It is a material amount. Is it? It's see, assets, the margin is 5% to 10%. Revenue, is it revenue or sales? The margin is how much? 1%. Is it right? Revenue is how? Now immediately you see, for this they will give you marks. Okay, that's very simple. For the calculation, just you put the calculation, you will get 1 mark. Take my word. Is that much importance is there? We have to mention that you have to mention the calculation, and you have to mention it is material amount. As the directors are refusing to amend the financial statement, we constitute it is a material misstatement. Is it right? As they should write off the balance. It is not recoverable. You have to write off. The impact of the auditors would be therefore be a qualified opinion, except for if management is agreeing, it is a unmodified opinion. Okay? If management is not agreeing, it is going to be a qualified opinion. Again, except for, we have to use and make it a point. See, these are the, whenever we use except for, it should be in inverted commas. Is that? This is the way it has to be done. What happens? What is the second situation? An accrual worth representing an amount due to new supplier has been omitted from the year-end balance. We cannot do that. No errors on accruals of trade payables has been found. Means only this is the error which happened. Is it right? Now, again, what they have said, see the thing. They have calculated percentage. They have calculated the percentage. The moment you will come across this, calculate the things. If the percentage is, it is clearly not material. First is general one. A accrual has been omitted from the records. No error has been suggested. This is a one-off error. Okay. In next stage, you have to calculate the percentage. Is that? If it is less than that, it should not be a material. Although the amount is not material, it should be added to the uncorrect. Even it is not, you have to mention that it is not included in the, you have to correct it. Is it right? If the once it is come to your notice, you have to make correction. Is that what you have to do? You have to say that it should be added to the uncorrected, which is total, may represent a material amount to the total, which may lead to financial statements requiring, definitely you have to make an amendment. You have to change it. Is it right? We cannot say that 1,560 is not material and we can skip that amount. Okay? That is the way it has to be there. The last one, a fire has been destroyed and inventory is material, didn't get any evidence. Without evidence, we cannot give an opinion. Okay? If the evidence is not there, we will go for except for. If it is a material misstatement, then we are going for a disclaimer of opinion. The auditor opinion will probably modify. Is it due to inability to obtain evidence? Is it? We are not getting the evidence. Don't have two things in your mind. Is it? Don't have two things. Make it sure that when you are doing this, we cannot say, we have say straightforwardly, because the auditors cannot obtain sufficient appropriate evidence. This has to be, as it is related to the evidence, it is for the except for. Qualified opinion, you have to give a qualified opinion with except for. The next few slides talks about the opinion not modified. This is because the reports includes emphasis on matter paragraph. Is it emphasis or other matter paragraph? 700 is 706 is the emphasis on matter paragraph. Someone, okay, please take your time. Someone amend that list. Is it right? Whatever the list is there, just amend it. Otherwise, I will also amend it. Okay. Go from the sequence, whichever you have amending, put it in bold letters. Okay. In WhatsApp, you have that option. Is right? Keep it in bold letters so that we can know. First, I will do. Okay. I will do and I will send now. And according to that, whenever we are making amendments, you have to make the amendments for the last one. Okay. It is important to understand that although opinion may be unmodified, the report will be modified by the inclusion. Why they are saying this? Okay, they are giving some way of they are giving some basis for the next slides. So you can have a modified opinion. With a modified opinion, you can have a modified report. Fine, that's fine. But an unmodified opinion on the matter, other paragraph. Let's see what they are mentioning in the next slides. Okay. Is that emphasis? What is the emphasis of? What we say? Emphasis is unmodified opinion. Is it right? Emphasis is nothing but unmodified opinion with some. They have followed the rules. They followed the assumptions. Everything is clear, but the auditor has a doubt. Is it right? If that is the case, auditor put it as an emphasis on refers to the matter appropriately presented. Is it right? Appropriately presented or disclosed in the auditor's judgment is of such importance is fundamental users' understanding of the financial state. It means appropriately presented in the auditor's statement. If that is the case, it is a emphasis on matter. Uncertainty related to future outcome of any legal cases. Is it right? Legal cases. Is it? Means you have to mention except for. Is it right? Early application of a new accounting standard. Is it right? You are changing some standards. Is that any changes has been made in the reporting standards? Definitely it will have effect on the financial reporting standards. Is nothing but assume you are changing the method. Is it right? Only methods will be there. Is it right? You are changing the presentation of the fair value. Take it as an example. Okay, for a fair value, business combinations. Is it right? Then we have to mention how it is going to, except for other things are same. Any major catastrophe that has been hard continues to have significant effect on the, like COVID, okay, like anything like floods or COVID, something once in a while, okay, then it has to be what you have to mention, except for the situation, other things are agreed. What is the content of the emphasis of comes immediately after in the opinion paragraph. Okay, clear reference to the matter we have to mention. Is a location of relevant disclosure with respect to the financial statements. Must state that auditor's opinion is not modified. Is it? We are not modifying. Unmodified. Is it right? It comes when it is an unmodified opinion. Okay, unmodified opinion with emphasis on paragraph. Is that with emphasis on paragraph? Is that it? We draw attention to note X that the financial we describe that uncertainty related to outcome of the lawsuit filed against the company. Our opinion is not qualified in respect to the subject matter. Is that? It means we are saying is a unmodified opinion. Not qualified means is more or less agreed. Okay, more or less agreed. Other matter paragraphs, example they gave, refer to the matters other than those presented or disclose any other matters is that is relevant to users understanding the auditor responsibility the report. Other are prior period financial reports not audited. That it's unimaginable. Okay, don't worry about that. What is the content of other matter paragraph? Comes immediately of the opinion paragraph. Other matters required to be presented or disclosed in the financial statement. Other matters not required to be presented and disclosed with financial statements does not include the information that the auditors is prohibited. It is not okay, fine. Okay, keep knowledge about that. Maybe section A is very, very challenging. Understand? If you are missing one slide here, in question A we cannot do that. Okay? That is the difficulty in the section A. Is it under very challenging? Is that if you are missing any point, we cannot work it all on the side. What are the certain ISS content requirements for emphasis of matter paragraph or other paragraph? ISA 20, agreeing the terms of engagements. Is that emphasis on matter paragraph is 1 to 10. Other matter paragraph are subsequent events. Okay. Emphasis on matter paragraph is subsequent events. Certain ISA contain requirements for emphasis of matter or other matter paragraph in specific circumstances. In which situations is it right? Which circumstance, which scenarios or which circumstances they are going to use it. If it is related to ISA 210, we are making it on a emphasis on matter paragraph. We'll see how it is applicable. Okay, then only we can understand. Is that how how it is going to be applicable? I'll come back to this. Is it right? I'll come back to this wherever it is required. Definitely we will see. Is it right? Emphasis on matter paragraph and other paragraph seems to be difficult area for the student. First time they will say this. Is it right? Really, it's little bit challenging for us to identify. Is it right? Inshallah, don't worry about that. Remember, there are some specific circumstances where these paragraphs are used. Exactly. Students tend to suggest they need to be used when they are not appropriate at all. Emphasis on matter paragraph, other matter paragraphs could be examined. See the thing? They are talking in terms of what? Section A. That's the most challenging one. Is it right? In the specimen exam. Auditor reports are a common source of confusion. However, they are highly likely to be tested, as this is the key subject area. Is it right? The report is very sitting. So far, the specimen exam consists of section B, 8 marks. Is it right? The best way to improve your confidence is here to practice past exam questions. Fine, we'll do that. Is it right? Next. Emphasis of matter paragraph is used in an audit report to draw attention to a matter affecting the financial statements. Fine. Emphasis on matter paragraph. Which two of the following are correct in relation to emphasis on the matter paragraph? Is it right? Unmodified opinion. There is no qualified opinion. Is it right? There is no qualified opinion. The auditor report is referred to as an unmodified report. The matter is deemed to be fundamental to the users of financial statements. It is used when there is a significant uncertainty. Having an emphasis on matter paragraph is an auditor report does not mean that audit opinion is qualified. Fine, that's okay. It does not, this however mean that the audit report is modified. It is not qualified. It's just the thing. That is what you have to have a differentiation. That is the reason they are saying it is difficult. Is it right? There is a differentiation. What is the qualified and what is the modified? Qualified means big question mark. Is it right? Big question mark. Modified means the management agreed to change. Agreed to change. Emphasis on matter are used to refer to a matter appropriately presented or disclosed in the financial statements in such a importance of fundamental uses to understanding of the financial statement. It is used where there is significant uncertainty. It is not qualified. It is only modified. It doesn't have a qualified. It is only a modified. The audit report is unmodified. That is also not there. It is a modified opinion with emphasis on the paragraph. One and other information, financial and non-financial information. The auditor regarding to other information, continuing. Okay, fine. That is not that example of what is other information. Employment data, financial summaries, expenditures, ratios, name and officers. Fine. Is that? Just keep it in mind. Okay. Just remember, we will, if we do coming across in multiple choice questions, we'll see. Now I will start multiple choice questions from the end. Okay, I will start from the end and I will go to the beginning. Okay, we will not continue because we have to cover the things which are there in the end also. What they say, what is the auditor's responsible for other information? This must be read. Other information, identify inconsistency. The inconsistency means that the information contradicts. Fine. A material inconsistency may doubt and audit conclusions drawn from the evidence previously obtained and possibly. Fine. Is it right? It's material consistent. Financial statements, modify. Amendment required in financial statements, modify. Actions to take if management refuses. Yes. Amendment, if it is amendment required in the financial statements, if management refuses, you have to give which type of opinion? Modified opinion. In other information, if management refuses, other information is not that much having the weightage. Is it right? As simple as that. That's the reason they are talking in terms of you. If every problem is there with other information, communicate with the director. Emphasis on matter paragraph. Withhold audit report or withdraw that engagement. Fine. Okay. That's not. Is that? We'll see. A misstatement of a fact. What is the misstatement of fact? Yeah. Is it right? At some point of time, while preparing the mock exam, I came this point. Okay, that is the difficulty. Every slide, if you skip one slide, it is there for the. I came across this for how many marks? You know, for 2 marks. Is that it is a very new. A misstatement of fact is where the other information that is unrelated to matters appearing in the financial audited finance is incorrectly stated or presented. Is that appearing in the audited financial statement is incorrectly stated. A material misstatement of fact. A material misstatement of fact may undermine the credibility of the doubt. Means you are not disclosing or not presenting the actual value, okay, actual reason. I'm not saying the value, you are talking in terms of actual reason, is it right? In terms of what? In terms of notes to the accounts, is it right? Anything with respect to the financial statements, something is there and you are incorrectly presenting in terms of values, okay, that is what it says. It says may undermine the credibility of the financial statement. See, what is the misstatement of fact? It is not related to the financial elements, is right? Any other information. Other information means the moment you are talking about what is the examples of other information they mention here, is it right? What is the examples of other information? Anything reported by the management report, is it right? Management report is other information. Financial highlights, summaries or any highlights is other information. Employment data is other information. Fine. Planned capital expenditure is not actual capital expenditure, it's a planned capital expenditure. Is that financial ratios? It is not part of financial statement. But what happened? Don't say that it is not part of financial statement. Whatever happened is in the financial statements, is that whatever happens in the financial statements, misstatement of fact is nothing but it is the reflection. Is it that? It is the reflection of what? It is a reflection of the financial statements. Okay, so indirectly, it is not as simple as that. It is not directly we are focusing on that, but it is a indirect in nature.
Mr.
Yes.
I have one question.
Yeah, tell me.
Now, if the manager refused to amend the financial statement, any matter in the financial statement,
Okay.
we will issue the qualified report, right?
Yes.
Okay, the qualified report, it can be modified opinion.
Qualified report will be modified only.
Okay. Unqualified reports.
Emphasis on matter paragraph. Okay.
And the disclaimer, adverse opinion, these will be under qualified report, right?
Qualified report, adverse opinion.
Okay. Clear.
Okay. 1 minute. 1 minute. We will do one of the slides where they have mentioned very clearly here. We have done in the beginning just to make it more specific about our understanding. In the beginning we have done this. Here. If it is materials misstatement, is it right? If assume management has not agreed, is it right? Management has not agreed. What we'll do? We'll say it is an adverse opinion. See, only where we are going to say material, it is a see in most of the cases, is it right? In all the cases where 1 minute, I just want to make it. In all the cases, is it? See that here. The first classification is standard report, unmodified opinion. It ends there. There is no continuity is there. Is it right? No continuity. If there is changes in the audit report, is it right? if there is any changes in the audit report. Unmodified opinion and modified matters to be affected. Some opinions are unmodified, okay, some are modified. What is the unmodified report? Unmodified opinions, you have emphasis on matter paragraph. Is it? Unmodified is emphasis on matter paragraph. Is it right? Very clearly. That ends there. Unmodified opinion, any other matter. That's ratio analysis, management ratios, employment data, management report, or other matter paragraphs. Okay? Now, what is the modified opinion? When you say it is a modified opinion, you have two things. One with respect to the evidence, sorry, one with respect to the evidence, one with respect to the misstatements. Is it? One is with respect to the evidence, one is with respect to the mistake. If it is with respect to evidence, is it? Evidence, fine. We are not that much serious on evidence. Understand my point? We are not taking that much seriousness on the evidence. Fine? Okay. If it is not pervasive, opinion will be qualified. Okay? Opinion. If it is pervasive, we say we will not express our opinion. Okay? If not pervasive, it means we'll disqualify it. Means we keep distance. Do not express any opinion. Nothing come to our knowledge. Okay? Listen carefully. And it's very important. Is it right? If the auditor will say nothing come to our knowledge, next time when I are going to revise this, it is in the questions. Every other question it will come. Nothing comes to our knowledge. If you are writing like this, it means they are not do not express an opinion. Is that? This is the best example. Do not express the opinion. It is disqualified. We are not qualifying. See, disqualified is more dangerous. Understand what? Qualified is also, at least qualified is you are agreeing. Is it? Qualified is the client is agreeing, accepting. Disqualified means they are not getting any information. How you can give some opinion on, or you are not getting any evidence, how you are going to give opinion on that issue? Is it? At least, is it? You are not getting. That is what it says. And and just now I remember this. Is it right? And in the question paper answers, they have made it very clear. If nothing comes to our knowledge, it means a doubtful audit report. If management doesn't agree to make any changes, if management doesn't, and it is material misstatement, then definitely we have to mention it is an adverse opinion. No doubt on that. Is it right? It is an adverse opinion. If management agrees to change, you have to give a modified report. Once you are giving a modified report, is it right? You have to mention, is a modified opinion. Any changes is happening, it has to be disclosed. That is very important. Whether any changes is happening, anything comes to the mind, in my opinion, in our opinion, the substance, it is modified or it is not modified, it is unmodified, fine. If it is unmodified, except for. If it is modified, you have to mention whether it is qualified or it's non-qualified, whether it is adverse, whatever it is. Or it's clear to you?
Yes.
What you have asked, it is there here. Is it right? What you have asked, it is there here. In a initial actions to take, is it right? Actions to take if management refuses. If management is just now you asked, I have not seen the next slide. Is it right? Actions to take if management refuses. Initial actions. First, what you have to do? You have to discuss with the management. This we have done. Is it right? If still relevant, ask management to consult, take the opinion of the third party. Is it? Take the second opinion. Action to take, management refuses, inform the people who are charged with governance, board of directors. Appropriate further action, example, consulting the auditor's lawyer. Means if they don't take into, they will not want to make any changes. You have to inform to the people charged with governance. You have to take the opinion. Is it right? The next few slides about the opening balance as comparative statements. It's opening balances are you clear about this? Sorry, I just missed it. Are you clear about this? Is it right? If management doesn't agree, is it right? If management doesn't agree, you have to inform those with the governance and you have to take the opinion of the auditor's lawyer. Legal opinion you have to take and say that yes, management is not wish to make any changes. What we have to do? We should not stop there. We have to see the alternative. This much you have to write. That's all. These 2 points. If management don't agree, then you have to, before giving adverse opinion also, you have to explore all the options. Is it okay? Yes, Aisha, Fatma, Mehta and Faiza. Yesterday you said it is a boring lecture. Is it right? This is not. You cannot say it's a boring lecture. Is it right? It is the end of the Tina. It is like a climax. Okay, you have to give opinion. Very simple. Without opinion, we cannot end the report. Is it right? That's very crucial for us. Is it right? Without opinion, we cannot end. I will dedicate 2 or 3 questions only on this. Okay, but not only on this. We take inventory. We talk about this. We take non-current assets. We are talking about this. Okay, in a report format. Whenever we have a question regarding in the report format, we will touch these points. Okay, we'll touch these points. Opening balances should be at the beginning of the period. They are based on the closing balance of the last year. They also include disclosures requiring the existence of the beginning of the period, such as what. Just I'm going through it. Is it right? The initial audit engagement are those with the financial statements for prior period were not audited, or what they are audited by a different auditor. If it is done by a different auditor, that is one of the things we have to verify the opening balances as such. Is it right? Opening balances for initial audit engagement. The first, if you are taking for a first year, is right? First year of audit, the auditor has to get appropriate evidence about whether opening balances contains any misstatements affect the current period, or appropriate accounting policies are consistently applied. Is it? Means if you are having a new engagement, audit engagement, what is one of the preconditions is you have to think about the opening balances. Impact on the auditor report: if lack of sufficient evidence, the auditor opinion will be modified, qualified, or disclaimer. If opening balance contains material misstatements, it could materially affect definitely current financial statements. Policies not consistently applied or accounted for, the auditor's opinion will be modified or adverse opinion. If they say that they are not going to be consistently, they are not applying it, definitely it will be an adverse opinion. Comparative statements, fine, current year with the previous year, is it right? Previous year. I think this standard is not included, is it right? This standard is not included. Comparative statements, amount disclosed in the final, they have made some changes recently, is it right? See, now another, just I want to make sure, is it right? See the things. Listen, I will come back to this. You have your, you can access your portal, ACCA portal. Yes or no? Have you accessing the ACCA portal? Yes. In that is that whoever paid fees, okay? Definitely you all paid fees. Now I'm not telling like that, but only thing is now you paid fees now. You can now in that you can access the mock exam. I cannot access mock exam because is it right? You can access mock exam. Don't do now. Okay, don't do now. Take your time. Somewhere first or second. Okay, somewhere you do that. You attempt. You keep see. I will say this with that much clarity. Listen carefully. 1, 2, 3, 4. You keep all material in front of you. You keep material in front of you. You refer material. Understand when you refer material. Keep material in front of you. Attempt the examination and you will feel the experience. Understand? If you know the answer, don't see the material. See, I am telling you very simple. Is that there's nothing, we are making it. If you know the answer, don't see it. If you have any doubt, you see. But don't miss. Don't miss the exam, mock exam given on the portal. This week or last week only I checked. I cannot access that. Is that right? I cannot access that. Only thing is whoever have paid the fees, they can access it. Do it. Not now, after all the completion, revision, first or second. I don't know when the date will come. First or second, dedicated 3 hours 15 minutes. You cannot go beyond that. Start time, end time is very clearly mentioned. 3 hours 15 minutes. You do it and give me the feedback. Okay? Just I am going through it little bit quickly. Okay, see, why I'm not skipping is that the moment tomorrow we are going to do any my MCQ questions, if it comes here, at least we should have an idea. Okay, what corresponding figures about the period, is it right? Current year and prior year as such. Is it right? Comparative financial statements. That's why we are done. Analytical procedures. Is it right? In terms of analytical procedures, we use the comparative financial statements where we are making a comparison with respect to the current period and the period asset. The auditor's point to note, the auditor's opinion refers to the current period only. The auditor's opinion refers to each period which financial statements are presented. Okay. What they say, you are an auditor of Villa company and you are currently reviewing the audit for several of your clients which the audit field is complete. The audit senior raised the following issues. Check is a pharmaceutical company has incurred research expenditure of 2.1 and development is how much? 3.2. This has all been capitalized. We cannot capitalize it, is it right? The research expenditure is a revenue expenditure. Development is the capital expenditure. Is it right? Research is the revenue. Research is the revenue expenses. Till it is not, research is not completed, we cannot capitalize it. Profit before tax. Again, when the moment you say profit before tax, then you have to make a comparison about the research expenditure 2.1 divided by 26.3 is right, and 3.2 divided by 26.3 is that. We'll do that. Dawson computerized wages program is backed up daily. However, for a period of 2 months, the wage records and the backups have been corrupted and therefore cannot be processed. Wages and salaries of these months are 1.2, 1.1 and profit before tax is how much? 10 million. Fine. What is discuss the issue, including assessment, whether it is material. That's what is that you have to calculate. Describe the impact of the audit report if the statement reserves unsolved. First, you have to calculate the materiality. Is it right? First, you have to calculate the materiality. 2.1 is it 2.1 divided by 20. How much is there? 26.3. Is it right? 26.3. 2.1 is it 2.1.26.3? Yes. Is it right? 2.1 divided by 26.3. Is it right? It comes to how much? 7.98%. Is it right? This is what? This is profit before tax. Maximum how much? Maximum 5%. Okay. Definitely. Therefore, it is material. Is it 3.2 divided by 26.3? It is 12.2. Is it right? It is also material. See, the moment I am really cautioning you all, okay? The moment advising you also. The moment you will get something like this, immediately procedure wise, you have to do calculation and you have to mention whether it is material or not material. If the you asked me na, if the directors refused the expense, the research cost, the opinion has to be modified. You have to modify and you have to give a qualified opinion. First you have to modify, then it is a qualified opinion, but not pervasive. It is not going to be affected all. It is only for the specific one. Is that how you will identify whether it is affecting not all or specific one? If it is a one time, if it is happening one time, it is not going to have impact. But it's going to take into consideration the other factors also. Then we have to identify it as a pervasive. Little bit. The moment we will do some 2 or 3 questions, we can have more clarity on that. Okay, just hold it for a while. And this will also apply if the development cost has been incorrectly capitalized. That's what I said. Development is capitalized. Research cost is a expenditure. Write down in your notes very, very basic point. The wages is 1.1, 11% of the profit. Is it right? 1.1, 1.1. What is the profits? 1.1. 1.1 divided by 26.3. Is it right? How much? No, 11%. How it is 11%? 10 million, na? Yeah. Is it right? 1.1 divided by 10 million. Is it right? It comes to how much? 11% of the profit before tax. It is material. Is it right? It is material. Now you will understand. Don't worry about that. Is it right? Don't worry about that. Maximum clarity will be there, inshallah, before you go for exam. Okay, inshallah. The auditor should seek alternative procedures, whether it is for the 2 months. If the auditors cannot obtain sufficient appropriate evidence, the wages cost, then the audit opinion should be a qualified opinion, except for. Why this is? This is a material and it's not a pervasive issue. Is it? It's not going to happen with other factors also. Is your isolation? Is it right? Panda, we will do this. Panda manufacture. We will do this while doing the question paper here. Okay, 2013. Okay, inshallah. Don't worry. Explosion. It is there. Is it fine? Exam link. Fine. Okay. Is it? Now, while coming on Saturday, okay,